All right, how to invest $10,000 in 2021. 2020 is over, thank goodness. We don't have to deal with that anymore. So now we're looking forward to see what we can do in 2021 to really maximize our investment potential. So the first thing we need to do is hit the like button, hit the subscribe button, and ring the bell for notifications. It would really help us out with the YouTube algorithm. And now that that's out of the way, let's get on to what you're really here for: how to invest in 2021. The first thing that we need to do is think about what we want out of our investments. First, we want to make sure we get a good return on our money. And second, we want to be concerned about expenses. So with that in mind, we're going to talk about 7 ways to invest $10,000 in 2021. Of course, it could be any amount. It's $1,000, $100, $100,000, whatever you have to invest. These are the tips and ways that we should be investing in 2021. The first thing that we need to do is think about our debt. If we have any high interest debt, and that's debt that's over what you would make on a return in another investment. So the stock market makes about 7 to 10% a year. So anything above that is going to be considered high interest debt that we need to get rid of. So think about credit cards, 14 to 25% interest. We don't want that. We want to pay that off. And think about paying that interest off as an investment of equal percentage. So if you're paying a credit card 15% and you pay that debt off, that's a 15% return on your investment. The second thing that we want to do, if you've got money left over after paying off your debts, is you want to invest in yourself. You want to get training, you want to get education, you want to get certification so that you up your income. It's hard to invest when you're worried about making the bills at the end of the month, paying rent, paying utilities, taking care of everything that all of us need to take care of to live day to day. So the best way to do that is to up your skill level and your demand in the marketplace. Now, that could be, as I said, education, license, certification. It could also be things like if you've got an empty room or an unfinished basement or an attic or something along those lines, maybe you could take that $10,000 and turn it into an Airbnb or a side hustle of some sort. Get a job, get a second small business started so that you increase your income and you have more income then to invest in 2021. The third thing that we want to talk about is really where we start talking about real investments that people think about. So the easiest thing is to max out retirement accounts. So if you work for somebody and you have a 401k at your work, then you want to make sure to check with your employer and see if there's a matching on your 401k. If there is a matching, then you want to make sure you max out whatever your employer will match in that 401k. Now the limits for 2021 are $19,500 per year. But think about the matching part as free money. So if your employer will match 50 cents, let's say, on every dollar that you put in, up to a certain percentage of your income, then if you put in $6,000 and your employer puts in $3,000, that is $3,000 of free money that you're getting just for maxing out your 401k at work. The second thing, after we've maxed out a 401k, if you have one, the second thing that you need to do to max out retirement accounts is set up a Roth IRA, and that's an individual retirement account that you yourself control. Now, the limits for a Roth IRA in 2021 are $6,000. So you have the ability to take that $6,000 and invest into an index fund or other funds that are authorized, other investments that are authorized for Roth IRAs. The good thing about a Roth IRA is that it is a what's called a post-tax contribution. So when you get paid, at the bottom of your pay, when you get the money, that's what you take a portion out of and invest into your Roth IRA. Now that means at the end, when you're ready to retire and pull that money out, then you're not going to pay taxes on the withdrawals, which is great because all that money grows tax-free over all the years that you invest in it. And just to give you an example, if, for example, you invest $500 a month in a Roth IRA, that will get you to the $6,000 max. If you average 7% returns over 10 years and you keep doing that, $500 a month to max out the Roth IRA, in 10 years, your investment is going to be worth $86,500. $86,000 just from $500 a month. And guess what? Over 30 years, it's going to be worth $588,000. Now, the key is to start as soon as you can and to do it every month. Just make it a habit. Start clicking it in, automatic. Now, if you've got your 401k maxed and if you've got a Roth IRA maxed out and you're self-employed, there's another great opportunity for you to max out an investment account, and that is a SEP IRA. It's similar to a 401k, it's similar to a Roth IRA, except it's specifically for self-employed individuals. And it gives a self-employed individual the opportunity to invest up to $58,000 in 2021. And it's capped at 20% of whatever your income is. So if your business makes $200,000 a year, then you can put away $40,000 as a retirement account. And the same benefits, the same accrual, the same return on investment, all of those things. The benefit of a SEP IRA for self-employed people is that where a Roth IRA is a post-tax contribution, SEP IRA is pre-tax contribution. So when you are doing your taxes, you're going to deduct the amount that you contribute to your SEP IRA from your total revenue. So it lowers your tax burden on day one. Now, the downside of that is that you'll have to pay taxes later on when you withdraw the money, but it helps you out now. So now that we've maxed out a 401k, we've maxed out a Roth IRA, we've maxed out a SEP IRA, if we're able to do that, the next thing that we want to do is we want to look at the best index funds that are out there. Okay, so index funds are funds that invest in some or all of the stock market. It can be a small sector of specific industries, energy industry or retail industry or real estate industry, that sort of thing. Or it can be a broad index fund, which covers basically the entire market. So if you think about the Dow Jones and the S&P and the Russell and the NASDAQ and all that, those are basically indexes that people are watching as they go up and down through the year. Well, there are investment brokerages that have created index funds which will mirror the behavior of those big indexes that everybody watches. And so if you get into an index fund, it's going to track the performance and the behavior of what the stock market does. So you can count on an average of about 7 to 10% in a return. So again, the same as before. If you put that $10,000 in, you're going to get that return in the hundreds of thousands of dollars over the course of 10, 20, 30 years. So that's the next place that we're going to go is ETFs, index funds, mutual funds, those types of things. The fifth thing that we're going to look at is individual stocks. Now, individual stocks come at this point because they're a little more risky than all of the things that we've talked about. So once you've paid down your debt, once you've invested in yourself and grown your income, once you've maxed out your retirement income, once you've picked some of the safe harbor index funds that we talked about, the next thing you're going to do is look around and say, okay, where can I get a little bit more bang for my buck if I'm willing to take a little more risk? And that is where you're going to pick out the individual stock funds that you're interested in. Now think along the lines of Tesla's, right? Tesla this year was definitely a stock that everybody should have been in if we had just been able to foretell the future, because back in the low point of 2020, Tesla was down at about $70. And now it's up over $700. Can you imagine dropping $10,000 in Tesla back in March at the low point? We'd be sitting pretty now. But the thing about it is you've got to be able to understand the stock, understand the business, know what the outlook is for that business, and don't take the word of YouTube people like me who are talking about these things. Don't take the word of stock pickers. Do your own research. Find out what you're comfortable with, what the company's doing, and know the numbers of the company, because we can pick some winners, but people pick losers too. So you've got to be able to understand what the business is that you're talking about, that you're going to invest in, and also understand and be comfortable with the level of risk that you're willing to accept and that you're going to have to deal with when you pick individual stocks. Another easier thing, and it's sort of a setup to the last one, but another easier way to invest that is just to hold it in a high interest savings account or checking account. Now, that's not really an investment because they're not going to pay you a bunch of money, but there are some accounts out there that will pay you, you know, 0.5%. Right now, they're at about 0.5% as some of the highest ones. A year ago, some of the highest ones were paying 2%. So it just depends. It's going to fluctuate up and down. But the benefit of doing that is that you also have that cash ready and available if you find another investment that you want to jump on. So, for example, if you are wanting to invest in stocks and you find one that you really think is a good one, then you have that cash sitting on the sideline. But when it's just sitting on the sideline waiting for you to find that stock, you're still getting a little bit of money back in a return. And it's nice to have that cash sitting there, number one, for your emergency reserve, which is important. So 3 to 6 months. If 2020 has taught us anything, we all need an emergency fund of 3 to 6 months of income. So make sure that's in a savings account that's paying you high interest. The next thing that you're going to look at with the cash fund or the high interest savings fund is having money available to buy real estate, which is number 7. The best way to invest in 2021 is to buy real estate. So, you know, real estate has been on a little bit of a tear this year because the interest rates have been so low that people are able to get into the market. So imagine when you go to buy an investment property, you're going to have 10 to 20% down for that lender to take a chance on that investment property. So with $10,000 in the bank, or showing on your statement from your higher interest savings account, the bank is going to lend you on a $50,000 to $100,000 property. And so you're able to get those properties, particularly if it's one that you're buying undervalued, that needs a little bit of work, that you can then go back to the bank after you've done the work on and say, hey, you know, I've bought this property, I fixed it up, I've got it rented out, and now I think it's worth $150,000 instead of the $100,000 that it was worth when you loaned the money to me. They're likely going to refinance that for you. And if you don't refinance it because you don't want to keep it as a rental property, you can always flip that property and pocket that extra $50,000. And so those are the things that we're looking at. By the way, don't forget when we're talking about real estate that it doesn't have to just be a property for an investment, meaning that you're going to flip it or you're going to rent it out to somebody else. Because sometimes the best investment, if you don't have a property yourself, or you're renting, you're living with somebody right now, the best investment for you to make with $10,000 is to get your own real estate, get your own place, your own home. Now, with an FHA loan, for example, you can put as little as 3.5% down. So if you've got $10,000 in the bank and you can qualify income and credit wise, you can probably purchase a house that's up to $300,000 in price, which is pretty incredible. Now, obviously, you want to make sure that you don't take on more than you can handle as far as the debt load goes. But the other trick with FHA loans is that the FHA will guarantee, and that's what the FHA is, it's a guarantee from the government to the lender. The FHA will work with 1 to 4 unit properties. So that means that you could buy a duplex, a triplex, or a fourplex, live in one, and rent out the other 3 units to pay for the mortgage. So you've got $10,000, you buy a $300,000 fourplex, and you rent out the 3 other units. You live in one, and you rent out the 3 other units, and you're charging them $1,000, $1,500 a month. They're going to make the payment on your mortgage for you. So that's a great way to take advantage of FHA lending when it comes to buying real estate. So that's it. It was kind of a quick video, but I wanted to give everybody an opportunity to get the information out so that you can plan for your 2021 and make it the best way possible. So we've got pay off high interest debt. We've got invest in yourself We've got max out your retirement accounts, find an index fund that you're comfortable with, pick some individual stocks that you're comfortable with, find a high interest savings account that you can use for your emergency fund and the cash on hand to show liquidity for investing in. Number 7, real estate. Buy real estate and take advantage of all the opportunities that are out there to invest and grow your wealth and happiness in 2021. So thanks for listening. I appreciate it. Hit the like button, hit the subscribe button, and ring the bell for notifications so you can see all the videos that come out. It would really help us grow the channel and get information out to people. We really appreciate it. Have a great day.